So today's letter is G. I've got two important G terms for you today. The first of which is gifts. A lot of times in the loan process, there might be funds needed to close that the borrower maybe doesn't have already in their savings or checking account. And so they might need to get a gift from a family member. A gift is basically not a loan. It's not expected to be repaid, and there's no loan payments or interest or anything like that. And the documentation that goes along with a gift will depend on what kind of loan program that you're doing. But generally, there will be a gift letter that the donor and you would need to fill out and sign, stating where the money came from, what bank account it came from. And then we would also need like a copy of the check that the donor gives to you for the gift. Or the gift donor could wire the money to the settlement agent, and that's sometimes a little bit easier. And then sometimes on loan programs, we also have to get a statement from the donor's bank account to actually prove that the money, that the gift money was actually from the donor's account. That can be a little overwhelming. That's mainly on FHA loans that would be required. But gifts can come in handy, so you just have to kind of know in advance if you're going to be using a gift, what kind of documentation you might have to provide to the lender. The next word is pretty obvious. It's guidelines, and that basically every loan has specific guidelines. VA loans, FHA loans, USDA loans, conventional loans, renovation loans. Every loan has its own unique set of guidelines that the lender has the duty to follow. So a lot of times when we are making odd requests that the borrower thinks, don't make any sense, maybe they don't make sense to the average person, but the guidelines are very specific and we have to work within the parameters of those guidelines if we want to be able to sell that loan and do our job. With that being said, I will see you next time for letter H.